Hello traders and welcome to another video review. Today is Monday, January 19th, 2026. Let's take a look at the economic calendar for today. So Asian session was rich in data releases, mostly from China. We got GDP in China in line with the expectations, 4.5% down from 4.8%. Fixed asset investment down from -2.6 to -3.8. Industrial production up from 4.8 to 5.2, beating the expectations. And unemployment rate in the same level, 5.1%. Industrial production in Japan -2.7%, deteriorates down below -2.6%. That was the forecast, and the previous number was 1.5%. We are still waiting for the CPI data from the Eurozone. Core CPI and CPI data are scheduled for release at 11 o'clock, and at 11 o'clock Eurogroup meetings starts. Core CPI and CPI data from Canada are scheduled for release at 2:30. Monthly GDP tracker from the UK is scheduled for release at 3 o'clock. 45 minutes later, we got the Bank of Canada interest rate decision and business outlook survey. The market participants expect the Bank of Canada to leave the interest rate at the level of 2.25%. So that's about the economic calendar for today. Without any further ado, let's switch to the charts, and we start with euro dollar. Euro dollar 4-hour time frame chart, nice bounce, however shallow. Nevertheless, from 1.1578. Now let me just place this line here for this level. So that's today's minimum, 1.1578. The bounce was made towards the level of 1.1642 so far. Nevertheless, the market is still trading below this trend line, and it looks like this market wants to move lower because the RSI is still negative. So right now there is a slight divergence here between the prices and the RSI. Let me just grab my my arrow so I can show you guys. So we got this, definitely this even multi-divergence between those levels here on the chart and those levels with the momentum. This one is slightly lower, however that's definitely bullish divergence. So please stay focused, stay vigilant. We might just resolve this divergence and the market is ready to move even lower. So far only a sustainable breakout above the orange trend line might be considered bullish. For now, nothing like this is happening. Cable, British pound to US dollar continues to move lower. The same situation was spotted here. 1.3341 was the low. So let me just place this daily low on this level. So we got the technical support here, and then there is a bounce, but right into the consolidation and right into the technical resistance. So we got this level here, the intraday technical resistance, 1.3417. Without breakout above this level, we cannot say that something is going on with the cable. The bulls are not in charge of the market. However, there's one more thing I would like to point out here on the trend-based Fibonacci retracement. If we measure this swing low, and if we measure this movement here to the upside from the extremes, obviously you can see that we passed a 68% extension a long time ago. We passed 78% extension as well, but there is still some room to hit the 100% extension. Extension is at 1.3317, and at 1.3310 there is a technical support. So there is still some way to complete the ABC correction to the downside on the cable. US dollar versus the Japanese yen, big difference in a current situation. Not really the same situation as it was before, except the fact that 158.17 is now the technical resistance, and the market is trying to break above this level. Local low 157.44 with the negative momentum after this bearish divergence was made. How much did we went lower? How much? Let me just take a look. You can see that we went from this swing high to this recent low, minus 1.27%. Not too bad, not too bad at all. Nevertheless, as far as I can see, this might be a little bit bigger correction. Yes, minus 1.39. So still, this correction to the downside is a part of an up move, so there is no overbalance of price and time. The market might be ready to move higher if we break above the intraday resistance. Gold breaks to the new swing high. 4,690 is the new swing high. We broke above the previous swing high, so that's the intraday technical resistance, and we briefly tested the technical support at 4,540. So as you can see, this bearish divergence has been resolved, and right now market went as low as the level of 50, so the neutral level, and bounced right back on. So the current situation here is bullish. Gold continues the movement to the upside. Next target is 4,700. In the meantime, SP 500 decided to move way lower. We broke below the technical support from the last week for 6,886. Local low 6,867, so 20 points lower. But this movement to the downside with on the momentum is a little bit concerning. So right now, this level here, 6,886, is now technical resistance, and now we are heading towards this support and extreme low 6,818, of course, extreme low on the 4-hour time frame chart. So one more thing I would like to point out here. I don't know if this is something of a value. However, you can see that there is some sort of the trend line. We can even make it a little bit like that. Just change the color to orange as usual, and you can see that we broke below this trend line. That was saved, and then again big breakout below the trend line. So it means that the bears are in charge of the market, at least in the short term, and they are making pressure on bulls. We already below this level here. If we won't go back quickly, and if we won't go back above the 400 periods moving average, the outlook might be a little bit more skewed towards bears. Crude oil is back to the technical support and the demand zone that once was tested. So we are down after the fake breakout from 62.35. We are down towards 58.75 as the momentum keeps moving lower. Right now 44 points, and it's being and it's pointing to the downside after the rejection of the level of 50. Local bounce to 53 points only. Any breakout below this zone, below this demand zone, and especially below 100 periods moving average, which is 58.44, is bearish, and we are back inside the range and trading towards 55 level. Bitcoin failed to test $100,000, which is why we got this spooky movement to the downside. Very tricky on a 4-hour time frame chart, very tricky, and this was the trend line that was tested by the market. This is the weekend trading, and once the weekend is done, Asian session breaks this movement to the downside into the extremely oversold conditions just below the 100 periods moving average. So big failure over bulls to rally higher. Big failure. 91,910 is the local low, and for now is the technical support. The market is trying to move higher now, approaching 93,000, but we are far away from the swing high of 97,952, more than $5,000. So we went from the extremely overbought conditions to the extremely oversold conditions. Right now the market might be ready to move higher. However, breakout below this very important technical support might be a little bit concerning here. Nevertheless, we still got this level here. I will point out to the lows of today's, possibly some sort of the pullback. At least some sort of the pullback is. We should test trend line, even the $95,000 level again, and then we will see if there is a rejection or breakout to the upside on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.